Alright, hey guys, this is Vishal from Uncharted FX. Before we begin the video, please like and subscribe if you like my content, and also follow me on my social media and check out my blog. The links are in the description below. So this week I wanted to be a bit different. I wanted to focus more on the equity markets, gold, and also what I'm seeing right now in cryptocurrencies. So if you're interested in forex pairs and other setups, please check out the blog post for this week. Again, the link is in the description below. So let's stick with the equities. Let's talk about the equities first. Pretty much the same analysis from last week. We were watching this zone. If you remember, we're thinking there might be a retest here. And what we did is we fibbed the most recent move, and we talked about how the 61.8 is there, but even without the fib, this was a major flip zone. So we did retest, rejected so far. However, again, when I look for swings, when I look for lower highs or higher lows, I need to see that lower low break. That's the definition again. Once you have a confirmed lower low, that actually confirms the lower high. So again, if we do get a daily close below this zone here, the 28, let's call it 28,000 on the S&P, it can open a big downside move. And I'm pretty sure if you're into the markets, you already know about this, but a lot of people are talking about this. But a potential, if you do a weekly fib here, the 38.2, so the 38.2 retracement of this move comes in around the 2720 zone. A lot of people will probably be taking profits around there, and how price reacts here will be very interesting, to say the least. If you believe the mandate of the Federal Reserve is to maximize employment and handle inflation, then you'll expect them to be more patient. However, if you think that the new mandate for central banks is now to keep assets propped up, I sort of fall in that camp. Then when you see markets begin to fall, perhaps you might see some sort of rate cut talks, rather than rate cuts happening maybe in December or next year, but sooner rather than later. I believe the bond market is pricing at least one rate cut this year, but not anytime before September, really. So let's see what happens. Another interesting thing, again, if you follow my blog, you know my take on the US-China trade war. I believe China holds a lot of cards. Again, they haven't even decided to put tariffs on Apple yet, which is a big thing that they can do. And imagine how it'll hurt Apple and consumers when they have to pay 25% more for Apple products. So that's something China can do. But again, I've always spoken about how President Trump's Achilles heel is the US stock markets. Basically, he wants to run in 2020 with the slogan "Keeping America Great" rather than "Making America Great." And for that to work well, he needs higher stock markets. So I think the Chinese know this. If they can, or if American markets can continue to fall, I mean, yes, they can sort of help it out by selling treasuries or maybe even doing some short selling by themselves. President Trump will be the one forced to the table, to the trade table. And when that happens, it'll be the Chinese who will dictate the terms. I mean, of course, President Trump will sell it like a victory, but you just need to know that if markets continue to fall, Trump may be forced to the table. And I think this is actually why President Trump is very vocal about cutting interest rates, because he knows that this is a weakness, right? If markets continue to fall, he'll have to make market participants happy. He's been trying to pump the markets with his tweets, talking about how talks are good and bad. But if you follow my blog, you know that I don't think people care about that anymore. What they want to see now is either handshaking or pen to paper type deals, rather than tweets and talks about lovely letters and that kind of stuff. So I think that's pretty much what we might be seeing in the future. So again, what these markets do might tell us what's coming down the road. So watch this break here. I'm just going to remove this fib. But you can see that even the NASDAQ similar situation. And a lot of these other equity markets are doing the same thing. They've had their first down move yet, and now we're looking for swings in that downtrend. And remember, swings are lower highs. So for this lower high to be confirmed on the Dow Jones, if we get a daily close below this 2520 to 50 zone, let's call it, and it goes down the list for the Nikkei. Again, you can see nice trends up. We've only had one move down with no swings yet in this downtrend. Again, so if we do break above these zones, then this whole idea is pretty much nullified, right? But this is why I really look for closes below the recent lows, because that's what actually confirms the swing. So a lot of equity markets, again, I'm just going to go quickly down through them. Same sort of stance. A lot of the charts are on the blog post. Of course, some look better than others, but they all look similar. Well, except the Hong Kong, the Hang Seng is a bit different, but that's not really covered in this week's. But you can see everything is pretty much the same. Well, you know, world equities are sort of moving together. So again, the key, let's see if this break happens. And then further down into the future, we might hear more things about the Fed wanting to cut interest rates and President Trump pressuring the Fed to cut interest rates. Again, this sort of would confirm that their mandate is to keep assets propped up. However, Trump has a second reason to cut interest rates, and that is he knows that cheap money will keep the market propped up, and he needs markets to be propped up, because if they continue to fall and get weaker and weaker, it will be him who is pressured to the table, the trade talk table, because as I said, he wants strong markets before the 2020 election so he can run on keeping America great. Again, all changes, all political changes, all incumbents that are voted out, it's based on economics. If the economy was as strong as President Trump and the Democrats said it was, they would have won the election. It wasn't the Russians. It wasn't a whole bunch of racists coming out of the woodwork, getting ready to vote. It's purely economics, and that's throughout history, that is what causes big surprises, or I guess they call it populism nowadays, but it causes incumbents to lose their administration, you know, get voted out pretty much. Brexit, it was pretty much all about economics, so that's what really matters. President Trump knows this. I personally believe he has the 2020 election in the bag due to this whole Russia collusion. You know, he has so much ammunition to go against the Democrats. But if there is some sort of economic issue, or if markets are lower than, you know, quite lower than previous highs, he has a chance to lose the election. Because remember, when these markets go down, we're talking about pension funds, retirements, all these things are interlinked now, and you know, they're buying at the high, so it's not really a good situation. You know, like if you read my blog, you know what I think, that these markets have to be kept higher because so many issues will happen if they do continue to fall down. That doesn't mean we won't see pullbacks, because those are normal in trends. So again, you know, we haven't even made our first swing yet, so I'm expecting one swing, and usually in a trend you see minimum 2 swings. So you know, one swing and then possibly another one. Again, that 38.2 fib level, I talked about the 2720 zone. Keep an eye on it. A lot of people are watching this. I wanted to talk about gold. So is gold about to take off? First of all, let's talk about trend lines. I'm not too big of a fan of trend lines, just because they are very subjective. You know, does someone put a trend line with the candle bodies or with the wicks? Again, I just use it more as a slope, just to see if that trend is, you know, that trend pattern is still intact. I, as you know, continue to focus on lower lows and swings, so higher lows, lower lows, that kind of stuff. So what this is telling me, regardless of this trend line, if we do close below 1270, gold has some further leg down. Again, I'm just going to add a bit of geopolitical and economic confluence to this. I still believe that when the Federal Reserve cuts interest rates, gold will do really well. A lot of people talk about, gold being that hedge against inflation. I believe if the Fed cuts interest rates, cut interest rates, then real rates will pretty much be negative, which will be bullish for gold. I sort of take a different stance on gold. I've been reading a lot on periods of inflation, and they all do coincide with people losing confidence in government, in central banks, in the money that's issued, the fiat. So I see gold more as a confidence idea, confidence hedge. When people are scared of or are losing confidence in the system or in governments, money, central banking, they'll run into gold. If people are just scared in general, I think they'll still run into the US dollar because it is the reserve currency. But that doesn't mean that doesn't mean gold will go down when the dollar goes up. I think there's a time where both of them can actually move up together. As like the typical people will run into the dollar, but those who study economics and the past will understand, gold is a great tool because it is a confidence crisis instrument. So again, a lot of people are watching this trend line. We had a nice big engulfing candle here. Again, now, is this going to be a bull trap or a dead cat bounce? We shall wait and see. However, if we go on the 4-hour chart, you can see we had a nice downtrend here with multiple waves. And now we've broken up, and this could be our first higher low. If you read my blog post, I talk about the T's, and you know me, for higher highs, we want a close above previous highs. We didn't get that. So this is today's candle, so it's not closed yet. We act on candles that are closed, but you can see we didn't get a close above that. So it left us with a tease on Friday's candle. So let's see what happens if we get a candle close like this in a couple hours time. Then we have our first confirmed higher low, which means we can possibly have one more leg up because we look for at least 2 waves in a trend. So very interesting. Is this the big gold bull? Is this a big bull move coming? Let's see. I mean, of course, a lot of other technical analysis are drawing that trend line there. So again, when we went down on the 4-hour, we could see prices retrace up to this trend line here. Let's wait and see. I think we're at a crossroad here for gold. Again, if we do close below 1270, possible downside. And if we do get that down break, I'm going to wait to see once the Fed decides to cut rates, because once that happens, that's when I believe we'll be in that sort of confidence crisis cycle, and gold will do quite well. I wanted to quickly talk about, I should have searched that up. I should have had that open, but I think a lot of people have been talking about this article that just came out about the Russians buying a lot of gold. Okay, so gold-backed currency, but we'll talk a bit about that. So here's Kitco's talk about gold. There was another, RT covered it too. So Russia's spring gold update, central bank buys another 550,000 ounces. And there was even talks that Q1 of 2019 was a huge surge in gold buying by central banks. So Turkey, Kazakhstan, the Russians, the Chinese. Again, I'm looking at this more as a cycles guy. There's 2 types of theories. There's classical economics, and then there's mercantile economics, which is now called Keynesian. So the classical guys, they believe in low taxes, less regulations, and stable money, generally money backed by gold. That doesn't mean your central bank has to back the money 100% in gold, because not everyone's going to be running up to the bank to cash in their cash for gold, because they'll have confidence in the money, which means the central bank, can hold even 1% in gold and 99% in government bonds, and sell bonds to buy more gold if required. And essentially keep an eye out on this, because the other side is the mercantile. So that's the Keynesians. That's what we call it today. This generally happens at the end of a cycle, of an empire, of a civilization, of a decadent cycle, where governments get really big and they get, let's just say, they feel the pressures to devalue the money for political gains, for the short term. So what they'll do is they'll depeg the currency, make it a fiat currency, a floating currency essentially, and they'll devalue it because, again, for political gains, inflation and cheaper money, all that kind of stuff. So these cycles keep repeating themselves in history. So again, that could be a reason why gold is very popular now. I highly recommend you check out Nathan Lewis's work at New World Economics. He's probably the best economist when it comes to classical economics and the gold standard, in my opinion. And I like how he ties history cycles and gold and economic history with history cycles together. The other thing about gold is Jim Rickards calls it the axis of gold. So Russia, China, Turkey, Iran, and India. So essentially, it is a route to de-dollarization. A lot of people know that the Chinese have American bonds and talk about if they dump them, how it'll spike interest rates. Yes, they can do that, but the dollar can be printed by the Fed because of what the French call exorbitant privilege, which means that because the dollar is the reserve currency and also, the petrodollar, there's this artificial demand out for dollars. So essentially, this demand has to take a hit first before the Chinese can dump their treasuries. So this is why you're seeing a lot of heat up in Iran and Venezuela. Iran is selling their oil for anything except the US dollar. So you're seeing as the dollar gets stronger, countries like Turkey and India, their currencies have been getting decimated by the dollar. So they have an incentive now to actually not use the dollar. So they've been going to Iran because Iran will take local currencies, the euro, whatever. So again, Saudi Arabia is sort of feeling the pinch because they're losing their market share and their customers to the Iranians because of the stronger dollar. And many of you know about Saudi Arabia and the petrodollar system. So they might even threaten to drop the dollar, and they have a huge influence over American geopolitical and military and foreign policy. And the Americans might actually decide to do something about Iran because, they want to make sure this demand for dollars stays. In my opinion, Iraq under Saddam Hussein was taken out and Libya under Gaddafi was taken out because of their decision to not accept US dollars. So it would have done something to American dollar demand. I think the Russians and Chinese are in Venezuela. They're putting money to pump up, bring back Venezuela's oil production. And they want to keep Maduro in because Maduro will probably announce that he will drop the US dollar for oil as well. And the Americans can't allow that, so that's why they're backing the opposition to try to pull off a coup to get Maduro out of there. So that's what I see in the geopolitical front, and the dollar is a key to that. Again, going quickly back to gold, a way to de-dollarize, again, those axes of evil. None of those countries really want to hold each other's currency. The Russians, no one really wants to hold the Russian ruble, the Chinese yuan, Turkish lira, Indian rupee, the Iranian rial. So gold will be used for a balance of payments. A lot of people have heard about the Shanghai oil futures contract that opened last year. So essentially, China will buy oil from oil exporters using yuan. But because a lot of these nations do not want to carry yuan or hold yuan, that yuan is convertible to gold. And then gold can be used or taken back by that country, and then they can convert it back to their own domestic currency. So again, what you have to notice in that whole transaction is the US dollar was not used in that entire transaction. So that's happening currently, and I think that's why a lot of those nations are stacking up on gold. Again, if you follow my blog and work, I still think the dollar is going to move higher, and as the dollar moves higher, that's when all these problems get exacerbated and get much worse. So not when the dollar goes lower, but when the dollar goes higher, and I think it still might, because again, a lot of the traditional people now, they're modern day, I guess traditional would be the gold guys, but the modern day economic theory students and all that kind of stuff, they'll want to run into the dollar because of the reserve status rather than gold. And again, if you read my work, the Fed may be forced to kill the dollar, but that might happen sometime in the future. But again, gold and the dollar I think is very important. Let's now talk about Bitcoin. If you followed my blog work, you can see that well, we talked about the 4,000 level, 4,260 level, around that area a couple of months ago or a couple of weeks ago, and we didn't see a break until March. So we got that break. We talked about how this was a big flip zone. We've broken about that, and we had our first targets here at around the 8,400 level, and our next targets are pretty much at 10,000. So currently, as we're speaking, we are breaking that zone. So I'm very interested to see how this closes and if we will test this 10,000 zone. There's a lot of talk on cryptos right now. This article just came out a couple of days ago about Facebook launching a cryptocurrency called Global Coin, reportedly developing a digital payment system that will be rolled out by the first quarter of 2020. This company has been holding meetings with trading firms and officials before it hopes to start testing Global Coin by the end of 2019. So before I talk about, I think if you read my blog, you know what I think about cryptos. They will be a tool of enslavement pretty much. But let's just look at some other cryptos before we get into that kind of aspects of it. Again, if you follow the wave theory, we are making another higher low confirmed until we get that daily close above Ethereum. So looks good. I do like the charts of Ripple and Stellar a lot better. Again, nice pop. Now we want to see if this will be a new trend wave, which means we need a higher low here. And again, for that to be confirmed, we need to close above this 45-ish level here. Looks promising, I gotta say. But again, we could get something like this, where we had that pop, but we didn't. Oh, okay, we did get a fake out, but not a really nice break for a higher high, and we fell back down. So again, you know, I'm just saying it looks really good because we had a basing pattern here. Let's see what happens. I did sort of like this break here because this is a flip zone here at like the 40 cents level. We didn't really maintain it. So let's keep an eye out on this. And then of course, a lot of people are watching this flip zone here at the 59, let's call it the 60 cent zone. So I'm interested to see what cryptos will do. Again, this is why we wait for candle closes and we wait for higher highs, because the higher high confirms the higher low. This is a game of probabilities. Yes, we can buy here expecting a higher high to be made, but again, this thing could easily reverse. If we do get a break above this highs here and get a confirmed higher high, which confirms a higher low, the probability of success is even higher. So again, business of probabilities, that's what we're in. Be patient. We'll wait for those breaks and closes. A famous trader says this, but there's no prize for being number one in trading. No one's really going to catch the bottoms and the tops of all the moves. Our job is just to make money on the way. So again, Stellar, like it. Ripple, like it. Stellar, also like it as well if we do get that close above this 14 cents level. This is looking really good. Probably, move up here to 40 cents. Yeah, it is a flip zone, support and resistance. And then we have our quarter level. So is this a big move here for cryptos, like the next big bull market? Let's see. A lot of people in this sphere look at cryptos and gold and silver as a way to get away from fiat money. Yes, I see that as well. Again, if you know my take on cryptos, I believe we are going into a global digital currency. The next financial crisis will see a shutdown of banks. Money will not be able to be withdrawn. People will be angry, and the governments will say, you know what? If you want access to your money, let's switch to a cryptocurrency or a digital currency, because if we do bail out all these banks, give them liquidity, you guys are just going to do bank runs and the cash will be gone ASAP. So what we're going to do now is we're going to transition to a digital currency. here's your, your login or whatever. All money is now digital, no more cash. And why does government want that? Easily for taxes. All transactions will be monitored. If you do a private job, if you sell an item on Craigslist, if you sell an item on eBay, that can be taxed. It's great for the green taxes, the carbon taxes that will come. And again, there's the other side of it where government can actually block your access to money if they don't agree with your opinions or don't like what you have to say, that kind of stuff. And again, that, this is my opinion on cryptos. I think it's coming. I think a lot of people can see digital currencies coming. And the big thing, if you follow my blog, is about the 4 types of income: the employee, small business, investment, and the passive. I personally don't think that investment income and passive income will be taxed too much, because that's how the wealthy and the rich make their money. They don't really work in the employee class for $1 million a year. The employee class is pretty much already taxed out, getting taxed, taxed up to their eyeballs. Small business is where it's at. And if you read a lot of small business laws, you're hearing that a lot of these loopholes are sort of being shut down. So, buying a home or a car under your small business, or paying your family members, that kind of stuff. And there's a lot of loopholes for small businesses. Once you go to a digital currency, these loopholes pretty much are going to be very tough to avoid. So digital currencies also help government to actually get the taxes from small business. And it can even be tips from restaurants, which is generally hidden. So that's what they need. If you're looking at government now, a lot of governments are broke worldwide, and they have to increase taxes. And even if we do MMT, the MMT guys have admitted that essentially it's the government that acts as a central bank. So to prevent inflation, the government will have to remove money as well. And the way they'll remove money is through taxation. So they'll have higher taxes, they'll give a lot of money out to people, and then they'll have to take that money out of the system through taxation, and then I guess destroying the money or whatever, right? So again, digital currencies is coming, in my opinion. And a lot of the crypto guys might hate me for this, but this is why I think it's very important. You ask who invented it. I've spoken to a lot of other people in this industry, in trading industry. A lot of people have been telling me it could be the US government, or it was a project by Raytheon and Lockheed Martin. But again, I think there's been this sort of psyop, I guess you can call it, where cryptos have been made very trendy, this idea of digital currency. And it's a way to, like I said, for enslavement, right? Specifically for taxation and to track money. There's some other things about it that I don't really want to get to. A lot of people have talked about the automobile industry and how digital currency will be required for, say, a kilometer driven tax, where when you're driving your car, all these things will be monitored. So how much you drive your car for a kilometer, it's like, there's just gonna be tons of taxes. The green movement is the best way to tax, because you won't get a lot of people angry at you, because they don't want to be known as the global warming denier. So quickly on Ripple, I wanted to speak about Ripple. I believe Ripple, well, maybe not the token Ripple, but the technology, the XRapid, can actually be the next reserve currency. When this, and let me tell you what I mean. When this next crisis happens, the last crisis we had governments bail out banks. This time banks are going to be broke and governments are broke. So who's going to bail governments out? It'll probably be the IMF or the BIZ. And the way they will do it, and this goes into how we will go to a digital currency. I think what the BIZ and the IMF will do is, instead of sending cash to people, they'll basically say, okay, we're going digital. We're going to use XRapid, or we're going to use Ripple as the currency. They might rename it to the IMF coin, or the SDR, whatever you want to call it. They could rename it whatever they want. Global coin, actually, well, Facebook's calling it global coin. And then what they'll do is they'll put a price on that coin, say $1,000, $1 million, I don't know, whatever number you want. And then they'll send out those coins to all these central banks and governments around the world. And just like that, those banks and governments have liquidity. So again, will it be Ripple? It's very likely. It might not be the coin. The IMF, they could have their own coin sitting there, but if all the work's already done through Ripple, why invent it when it's already there? And again, if you look at Ripple, they already have pretty much deals and customers with pretty much a major bank in a lot of countries, Western countries. BMO, so I'm in Canada, so there's some Canadian banks here. I believe I saw RBC one time as well. So it's very likely. That's all I'm going to say about Ripple. This could be, like I said, the global coin for how they'll bail out governments, and we go to a digital currency. So again, this will be for taxation purposes. Governments know, that everyone knows that governments are not doing well. They're broke. Cryptos are the best way to ensure everything is taxed, especially to go after small businesses. And I'm worried about that. Yes, of course, because there is again, as I mentioned, the whole MMT thing, the MMT crowd, they'll probably want digital currency as well. It's just easier to hand out money to everyone in the country that way. And the economic theory is the government runs as a central bank, so they'll increase taxes to take that excess supply of money out of the system. Again, if you read my blogs and stuff, it's all about government getting bigger, getting more authoritarian. We should be going the other way around. Classical economics: less taxes, less regulations, small government, even a stable money. That's what creates economic prosperity for decades and centuries, if you read throughout history. And there's always a cycle, like I said, from fiat and like mercantile economics to classical stable economics, and we might be seeing that transition again. Just one more thing, I did read that book called The Fourth Turning. Let me just Google this up for you guys. The Fourth Turning by William Strauss and Neil Howe. I recommend it. This book was written in 1998, and they talk about generational archetypes and how every 80 years, which is basically like a think about it as a generation, things happen. So these cycles, it sort of do coincide with what we might be seeing, and essentially the year 2020 to 2025, we might see some sort of big event that sort of resets things, periods of instability, all that kind of stuff. And I think a lot of people are seeing that now. Again, it'll be interesting to see how this all plays out. We take it day by day, looking at the markets, but we do, I think we do have the geopolitical and economic sort of analysis. We do have it. We have nailed it on the head. So it'll be an interesting time. I think a lot of books will be written about these next 5 years than any other period in history. And it's just a good time to be alive, I guess. So again, that's enough for me. It's a bit different format this week. If you do want to see more of the setups, check out the blog post. And again, please like and subscribe. All right, and happy trading, everyone.